Welcome to everyone. This week video will cover the S&P 500 for the week of April 14, 2025. Before we start, make sure you read carefully the disclaimer. During the last 2 weeks we witnessed a very high volatility stock market all around the world. Is the decline over? Let's see together where is the potential bottom. Let's start by the overall picture. We will start with the monthly cycle, especially with the 18-month cycle. In my previous update, I was expecting the bottom for this 18-month cycle around the third week of May. On his way to form his low, the S&P 500 crossed below his 18-month cycle line. The green line, at 5,393.97, providing a downside target at 4,639. I mentioned in my past update the possibility for the S&P 500 to cross below his cycle line. And if that occur, we may have to change the 54-month cycle position. First, let's start by the crossing below his cycle line. This crossing confirmed the February 6,147.43 high is at least an 18-month cycle peak. Until now, the 4,835 monthly low is right on his 18-month cycle trend line, the orange line. Let's come back to the very long-term 54-month cycle position. Until now we used the first scenario, which placed the last 54-month cycle in October 2023. Because the S&P 500 crossed below his 18-month cycle line, we have to consider to switch to the second scenario, which is moving the 54-month cycle from October 2023 to October 2022. Why switching of scenario? If the October 2023 was the 54-month cycle, the actual 18-month cycle will be the first 18-month cycle of a series of 3 cycles to complete the 54-month cycle. Technically, the first 18-month cycle is supposed to form his low and find support on his cycle line. Since the S&P 500 crossed below it, this is a warning of something change in the market. Is that mean we should completely eliminate the first scenario? No, depending the market reaction during the next few weeks. If the market crossed back sharply above his 18-month cycle, then the first scenario is still alive. In this case, why the S&P 500 crossed below his cycle line? Sometime it's happened when there is an important news, the news doesn't change the cycles. It just adds some volatility or move the low formation little bit before or after his original date. In our case, anyway, we was expecting an 18-month cycle low, so no surprise the market decline. The only surprise was the amplitude. Since the second scenario is little bit more bearish than the first one. So to don't be surprised, we should consider the second scenario as the main scenario, until the market will tell us we are wrong. But we don't definitely invalid the first scenario. Like I mentioned above, if the market rebounds sharply and crossed back above his cycle line during the next few weeks, and we will keep the first scenario. But the prudence tell us to get ready for the second scenario. To find out what's to expect in the near future, let's go to the weekly chart. The 20 and 40 cycle week. On the weekly time frame we have a lots more information than the monthly chart. The weekly chart will help us to identify the potential bottom for this 18-month cycle. On the weekly chart we have 3 trading signals. The first one was on the 20-week cycle when the S&P 500 crossed below his line at 5,953.27 for a target at 5,759.11. The second signal was at the 40-week cycle line, the blue line. The crossing was at 5,796.96 for a target at 5,446.96. The third one was when the S&P 500 crossed below his 18-month cycle line, the red line at 5,485.93 for a potential downside target at 48.23, which was met last week. All targets on the weekly chart have been fulfilled. The red line is the equivalent in weeks of the 18-month cycle. This way, we have a more precise timing when the S&P 500 crossed below his 18-month cycle line. We will also use this cycle line to confirm the 18-month cycle bottom. When the S&P 500 will cross above this cycle line. This will be our second confirmation, the bottom formed or in formation. What to expect for the next few weeks? Assuming the 18-month cycle is forming on time, by the end of May, we could expect for the next 2 weeks, the S&P 500 rebound toward his 18-month cycle line, the red line, without crossing above. Then resume his decline to make a new low on his 46.39 target. Or maybe forming a double bottom. A double bottom is when the second low will form at the same level than the previous one, in this case at 48.23. On the chart, I draw with red dashed line the most likely scenario. The black dashed line represent the second scenario, the double bottom option. The next 20, 40-week and 18-month cycle low are still expected to form during the third week of May, the blue dashed vertical line. The 80 days cycle. The 80 days cycle is probably, at least for now, the most important cycle to follow. The last 80 days cycle low was on March 13th and the next one is scheduled for May 20th. Why this is the most important cycle to follow? Because this cycle will be the first one, which will give us the first signal of the possible 18-month cycle low formation. On this chart, the most important line to watch carefully is the purple cycle line. A sharp crossing above it will not only give an upside target, but the most important will confirm the 80-day cycle low is formed. In the Hurst theory, when the market cross above his cycle line, this will confirm the low of this cycle has formed at the lower point before the crossing. According to the Hurst rule of synchronicity, since this 80-day cycle will be the 8th and last 80-day cycle in this 18-month cycle, when this cycle will form his low, automatically all the next longer cycles up to the 18-month will also form their bottom. At that time, with a very high degree of confidence, we can call the bottom of this 18-month cycle. In conclusion, we're still expecting the 18-month cycle low occur by the third week of May, and we need one more decline to complete the all pattern. For more details analysis on the shorter term or to know how the cycles works in the stock market, I recommend to visit my website, Tradingmarketcycles.com. If you enjoyed the video, please give it a thumbs up to support my channel. Share it with others, and subscribe so you don't miss any important updates. This concludes this week's video. Thank you for following along. And I'll see you next week with another exciting installment.